Hey guys, hope you guys are well. Hope you've had a good day, great day. So over to our first open bot trade that we've got on our live trading bot 3Commas account. So we had to sell at the yellow at the white line. We had our initial stop of 6%, but as you can see, the DMT buy line has now come down. So that is our new stop, and actually close up above that is where we would go long. So if we look how far this is away from our entry now, this is actually only 1.2% away from our entry. So our risk is now managed down from 3% to 1.2%. So that's good at least. So at least now if we're wrong on this trade, we're not going to lose. We're not waiting to lose 3%. And then we can go long, and hopefully we'll get the bounce back up if that is what happens. Hopefully this is a winning trade and we break down. So I wanted to have a look at what our targets could be if we were going to break down. So if we go over to this daily chart here, you can see that if we get the Fibonacci tool on, that's the measuring tool, not that one, sorry, here we go, here's the Fibonacci tool. So as you can see, this level here is the 618, and we've got some good confluence down here as well. Sort of this level here, it acts as support, this level resistance. So we can see that I think that would be a potential great buy entry, and a great target to see if we can break down to there now. That'd be a very good move, especially if you get it both ways. If you could top and tail the market, get us down to there, and then buy back up again, that would be fantastic profits. But we don't necessarily have to get to the 618, and if we do get down there, that doesn't necessarily have to be the bottom. It's just a potential scenario, but we could be looking. I mean, there's a lot of confluence around this 382 area as well. The sort of the tops of here, this area just here. I didn't put a lot of weight on the 0.5. But the 0.5 does have a lot of confluence as well, looking back to here. We could only come so far as the 380. I mean, in all fairness, we could only come so far as the 236 if we are in a very strong market, if the market is proving to stay very strong. I'm obviously I'm getting a bit ahead of myself, like ignoring the 236, the 382, the 0.5, and then just hoping straight for the 618. But this market has retraced in and around the 618 area on various occasions recently. So I don't see how that isn't a good target, and this has been a very bullish move. This is gonna, and there's not been a lot of volatility, to be honest, other than upwards. So I do think in this whole range, a lot of people could be pretty complacent in their longs and been piling more and more longs on, which is obviously contributing to forcing us up here. So they're gonna be some people that are primed to be liquidated and they're gonna panic, and then they're gonna start selling if we do get down to this level here. So the big market movers, if they're not contemplating that as a scenario that they can try and realize, then I don't know what they're considering, but that to me is a good idea for them. So another thing I wanted to have a look at, that was the DXY, the dollar basket. This is the normal dollar basket, not the trade weighted dollar basket, which has a lot more emerging market currencies in. This is the normal DXY dollar basket, which is heavily euro dominated. So this is large, to a large degree, the dollar against the euro, but not completely. There's other currencies in it too. There's obviously the pound and the yen, and the Swiss franc in that too, in that mix. So anyway, what I want to show you guys is that this was looking weak. We were in a rising channel or wedge, or however we want to look at it, and we broke out of that, and we looked like we were testing at the bottom of it, and then maybe going to come down. This is sort of one, not just in this sort of chart pattern, but a break of the resistance or support, a comeback and retest, and then to continue back down or up, depending on whether it's resistance or support, is one of my favorite entries into trades, because it's just the best. I just find is the best risk reward entry, and then your risk is so easily managed by, if we break back into it, then obviously you know that obviously to take the trade off. So yeah, so we did have that. We got up there, we bounced off, we got up to it again, we bounced off, but now we've actually broken back in quite convincingly back into this channel. I haven't drawn both sides on, but yeah, we've broken pretty convincingly back into this channel, which could actually signify a lot more strength in the dollar, and then even if we potentially break to the top of this, even more strength. And this I believe will be very bad for Bitcoin if this is what's going on. Bitcoin has a strong inverse correlation to the dollar. Bitcoin is a risk on asset, and this increase in the dollar would is going to be bad for risk assets, global equities, everything. Even gold, it's going to put downward pressure on gold, even though gold may still stay strong in the face of this, because it isn't the only obviously contributing factor to the gold price, but it is a big one, and it could put a lot of pressure on the markets if this keeps going up. I'm pretty certain, I'm pretty sure if this does go back up to the top of this, if it goes over 100, we're not going to be having Bitcoin over 10k, with that being the case for certain, I believe. But we will see what does transpire there. But yeah, this is a warning sign to me. This is a red flag for the price of Bitcoin. This dollar looking like we're gonna get very strong again. This is putting the squeeze on global liquidity, risk assets, etc. So we'll just have a look at the 3Commas. So we've got, if you click onto my deals, we still got the same trade on here. I mean, the stop loss is saying there, but obviously that isn't the stop loss, because we will get an order from our TradingView. We'll get a signal that will then take us out of the trade. So that is on there. That's still going there. So that was all I really wanted to talk to you guys with at the moment. I mean, hopefully we're gonna, hopefully for the trade, hopefully, I'm sure. I did also want to say what I did as well. Whilst I missed my long entry down here in my main account, I did actually, at this retrace back to the original sell line, I actually sold in my main account at 9,900. It was literally bang on 9,900. I put the orders in. Again, on the principle that I usually work on, tester. Not that is necessarily a strong level of resistance or support, but I mean, you can look across from here. It's not a million miles away from being a level where we kind of do get wicks up to. So I did place sells there on main account, so I'm now also short on my main account at 9,900, and then short on the bot at 9,910. So yeah, we'll see how this plays out. I'm keeping the same stop here for my main account as well as the bot. I'm going to keep just playing it as if it's a DMT trade, as if it's the same trade. Not with the same take profits though. So I do, if we break down, I'll be having a looser stop to try and stay in the trade longer than the trading stop, and the DMT might potentially keep us in the trade if we do break down past the 2%. So yes, if you want to look where the 2% is, the 2% is looking at about down here. So as you can see, we basically, I mean, if I did redraw that, we did actually, from the initial sell, we did, this wick here was actually basically at 2%, but we did sell after this wick. So obviously that was previous market action. It wasn't like we sold and then we did wick down there, because then we would have been out of the trade already now for a locked in 1%, because we would have hit our 2% trading take profit, and then we would have got out the trade at the 1% trading take profit, which would have been a 1% profit, which would have been, because obviously 2 minus 1 is 1. So yeah, so yep, so remember, none of this is financial advice. I'm not a financial advisor. Stocks looking strong here. Looking at the S&P and the Nasdaq. Nasdaq especially strong. But obviously, you know, tech stocks are having their boom at the moment. But yeah, I'll be careful on that as well. Yeah, overall stock markets. A lot of these stock techs and also the Nasdaq itself are on weekly TD sequential 9s. So on there on a weekly scale. So you could certainly see a bit of a blow off top in these stocks this week, and then 1 to 4 weeks correction. So I'm looking out for that too as well. So for some potential, obviously this won't be trading on the bot, but for some potential shorts in some of the tech stocks especially. But yeah, and then gold looking strong too as well. Gold at 1573 at the moment. So it does look to be forming a bit of a rising wedge. So I would, I mean, if stocks keep pushing up and have a bit of a blow off top, I imagine there's going to be a bit of downward pressure on gold, especially with the dollar rising as well. But yeah, so anyway, so I went on a bit longer than I expected to then. But yes, so thanks for listening, guys. Yeah, remember, I'm not a financial advisor. There's not financial advice. Consult your financial advisor if you're going to make any risky trades or investments. Yep, so thanks for listening, guys, and I will probably speak to you again in the morning. Now that we're actually in a trade, I'll probably do a video when I get up in the morning, like I did today when we first were in the trade, and then also in the evening, like I'm doing now. So probably have double videos now that we're in a trade. Yeah, so thanks for listening, guys, and I will speak to you soon.